YouTube, what's going on today? Welcome back to the Mortgage Master YouTube channel. My name is Walter. I am a mortgage lender licensed in a handful of states, which you can find in the video description below. So the goal of this YouTube channel is to educate and inform the home buyers of America. And there's a handful of topics I want to talk about, but today's topic is going to be escrow accounts. What is escrow? Why it's beneficial? Should you escrow? Should you not escrow? What does escrow even mean? Let's go ahead and hop right into it. So when you're buying a house, you're going to hear the word escrow thrown around by everybody. Your lender, your title agent, your realtor, everyone's going to talk about escrow. So let's break down what escrow means. So escrow is essentially used in two different capacities. First off, there's escrow accounts, right? That's the whole premise of escrow. There's an account where two things can go into: your earnest money deposit whenever you are binding that contract that shows you're serious about buying the house. You put a earnest money deposit into an escrow account, right? That shows, hey, I'm putting up $5,000 because I'm serious about buying this house, and it is required, it is written into the contract and how much you put into escrow. So that's basically like enticing the seller, like, hey, I have the money, I'm serious about buying the house. Here's the money, I'm putting it up front, and the title attorney, the real estate attorney, or the title office will hold that money in a safe and secure account, and they will be the executors of that account whenever we close or we don't close, and basically we're putting that money on the line. So that's the first capacity of escrow. The second capacity of escrow is with your mortgage. So lenders may require an escrow account where you are required to hold a few things: taxes, insurance, and potentially HOA fees. Now, and all of the transactions that I've worked with, the only escrows that are being bought into on a monthly basis are going to be the taxes and the insurance. Now, you can escrow your HOA fees in some capacities. I haven't really ever seen it. I don't know if that's maybe for associations that have an annualized fee instead of a monthly or a quarterly or something like that. But anyway, let's talk about what it means to escrow with your mortgage. So whenever you escrow with your mortgage, you're paying a few different things, right? On your mortgage statement, you are going to see principal and interest that goes with your loan, and you're going to see escrows, taxes, insurance, and potentially HOA fees. So these items, taxes, insurance, and potentially HOA fees, go into an escrow account that is held and serviced by the lender. And your loan servicer will manage that account whenever these items must be paid in full. So taxes, when they come around, for example, here in the state of Florida, taxes are due next month in November. It's currently October 18th. So taxes are going to be dispersed, and it's going to go to the county in which the homeowner owes the property taxes to. And then the insurance. So insurance is actually prepaid. So your first year, when you go to closing, you're going to be paying for a year, right? And then over the 12 months that you're paying into your mortgage, you're paying for the following year. So let's say you're going to closing right now, you're going to pay from November 2024 through November 2025, right? And then over the course of your payments until November 2025, you're stacking up the money in your escrow account for your insurance to be paid in the following year, from November 2025 to November 2026, and then it just keeps happening as long as you have the escrow account. Now, taxes are actually paid current or in sometimes arrears. So for the taxes that come out here in the state of Florida that are due next month in November, that is for 2024. It's just paid towards the end of the year, pretty much. So, and then you'll have up to, I think, March or April of 2025 to pay your property taxes for the previous year of 2024. So I know it can be confusing with taxes being paid in current year or in arrears, while insurance is being paid ahead of time. And that's a big reason why people just escrow. People just escrow because they don't want to have to track on when their taxes are going to be due, when their insurance is due, and the loan servicer will handle dispersing the payments to make sure that your taxes are caught up to date and your insurance is caught up to date, and potentially your HOA fees as well. In most cases, you're going to make that HOA payment directly to that association. Now, on the flip side of this, the other argument is that from the clients that we'll talk to that are financially savvy, They will say, I don't want to escrow my taxes and my insurance because I'll have thousands of dollars sitting in this account and it's not earning me the interest that I could be making in the stock market and crypto and high yield savings accounts and CDs and treasury bills or what have you, right? They want their money working for them. So that's a big topic, because if you're someone that you're okay with stroking out a bigger check, on an annualized basis for your taxes and your insurance, then so be it. If you want that money working for you in some kind of investment vehicle, then maybe escrowing is not for you. So that's kind of the direction that you can take. You just have to see what kind of person you are with your finances and what kind of accounting method you want to go with. Now, there's not a difference in what the cost will be. The taxes will be the taxes. The insurance will be the insurance costs. It doesn't matter if you're escrowing or not escrowing. It's not going to save you any money. Next item that I want to talk about is your lender requiring you to escrow. Now, most lenders, generally speaking, are going to require escrow unless you're putting at least 20% down. If you're putting 20% down and your loan to value is 80% or lower, then you'll be eligible to waive your escrows. Now, if you are waiving your escrows, sometimes the lenders will actually charge you a fee to do that. So you might end up actually paying for the risk that the lender's taking on, because they want to make sure that you are not going delinquent on your insurance and you're not going delinquent on your taxes. Therefore, it's safer for the lender if you are escrowing with them. So they can charge you fees to waive your escrows. So I would expect something like that, or that might be a really good question you want to ask if you're having that conversation. But really, it is generally required if you're not putting at least 20% down. So if you're putting a 3% down, a 5% down, 10% down, you are going to be required to establish that escrow account, and you will be required to have reserves in your escrow to account for any jumps in your tax bill or your insurance bill going forward, because those things can change. Even if you're on a fixed rate mortgage, if your mortgage changes, it's due to changes in your tax bill and your insurance bill, or maybe your HOA costs if that's applicable. Now, I think we covered it all. Why it's beneficial. Should you escrow? Is it required? So if you guys have any questions, let me know in the comments. If you got value out of this video, please like, share, subscribe, and we will see you guys in the next video.